Welcome to the Building Web3 podcast. I have my good friend Tushar. He is the co-founder and managing partner at Multicoin Capital. Although our guest this week is a managing partner of a registered investment advisor, nothing in this podcast should be considered an offer of Multicoin's investment advisory services or should be otherwise confused for investment, tax, legal, or financial advice. Multicoin Capital has been at the forefront of blockchain investments. What do you believe that most investors were missing and are still missing about the true potential of crypto?
Hey, Jax, thanks for having me. Great to be here. What are most investors still missing? I think they're missing the utility part about blockchains. A lot of the recent hype and action has been around meme coins. We even had the incoming president of the United States launch a meme coin on the eve of his inauguration. And I do think that meme coins are here to stay because people enjoy them and they're going to keep trading them. So I do believe that. But I think the thing that I'm most excited about that most investors in crypto are not paying as much attention to is things with utility, specifically utility that touches the real world, whether it's touching the physical world through DePIN or tokenized securities and the efficiencies that that unlocks for our financial system, or payments and reducing the take rate of these financial intermediaries that impose basically a 2% tax on all consumer commerce. I think those real things are not getting as much attention right now.
Yeah, I know you guys wrote an article recently about meme coins. So talk to us a little bit about like your guys' general opinion there. Is it, good for the ecosystem? It's like, hey, it's bringing people in, and do we think it's like a trend that's here to last, or we think it's kind of like an ephemeral trend?
I don't really make moral judgments, good or bad. That's like, what right do I have to say what people should or should not do with their money and their time? So I wouldn't make a moral judgment on it. Do I think it's here to stay? I think yes, it's here to stay. Is it going to look exactly like this forever? Probably not. It is going to evolve. But this is clearly the evolution of the 2021 NFT trend, right? Those were meme coins with pictures, and now they're just like, they don't have pictures. They are all fungible, and you can trade fractions of them as opposed to having to trade the whole thing. But mechanically, it's the same exact thing. I do think that there are both positive and negative externalities of meme coins. Positive externalities is it's a stress test of the system. The fact that Solana was able to handle Trump meme coin launch, followed by Melania launch, and the system managed to support all of that without going down, that's phenomenal. That's such a huge win. And that's without FireDancer and Double Zero and all these other things coming to the network. So I think using meme coins to stress test the system to then see if it can handle the volume of the real financial world is a positive externality. The other positive, just a couple more things. Yeah, the other positive externality for meme coins is it gives people an incentive to have wallets. So we just have a bunch more people who've created wallets now. And I think that is a positive thing because then they'll go do other stuff within the ecosystem. But then negatively, obviously, there's a lot of predatory behavior out there, and people will lose money. And that can tar the image of the industry, especially in a deep bear market. So this does not come without cost.
But first, let's talk about our amazing sponsor, HiveMapper, who helps make this show possible. They're keeping maps up to date in a really clever way. All you need to do is drive your normal routes with their smart dash cam installed. No extra routes, no extra hassle, just drive like you always do and get rewarded. Join HiveMapper and keep the map fresh for everyone. Yeah, the pros and cons. And you mentioned Solana, and we just recently had Mert on the podcast. So like obviously, Solana, one of Solana's chief reply guys / yappers. What made you guys so like have such strong conviction in the Solana ecosystem?
Everyone else, I think, was optimizing for a different part on that trade-off space. They weren't optimizing for exactly the same thing. A lot of the other projects, I think, had what I would call the Bitcoin hangover of tried to be max decentralized, World War III resistant kind of blockchain. And that's a noble goal. It's a valid goal. However, that's not necessarily the most lucrative goal, in my opinion. I think the most valuable network will be the one that powers global payments and global trading. And I don't see a world where that system is also the World War III resistant system. I think the trade-offs that you have to choose for both of those things are so different that you can't have both.
Yeah, it's so interesting because we've done so many episodes, and one that comes to mind is with Lewis from Gelato, and he kind of paints a picture of like, hey, everything will be a roll up in the future, everything its own chain, and Solana quite the opposite. I mean, I guess you have like things like Solana network extensions coming out, and different usages of the SVM. But do you feel like that's the future of blockchain? Is it's like a single state machine, like one chain, kind of that can handle all of the load?
Make absolute predictions. I think about it probabilistically. I think the probability of it being a single state machine dominating the majority of payment and trading activity is substantially higher now than it was a year ago or 2 years ago, just because of the success that has had. And now the burden of proof is on the modular ecosystems, the rollup people, to go prove that the UX of rollups can be as good as Solana and a single state machine. I struggle to see how that's possible. Just like, you're always going to have some bridge latency going between things, between different rollups, and the security guarantees of a bridge are not the same. And, they're going to say, well, intents will solve that and solvers, but those are capital limited. And at the time that you really need to move between rollup A and rollup B is when the solver or the intents platform in between is going to charge the highest fee to do that. So how is that going to compete with Solana, where you don't have to deal with any of that? It's just single state machine. You're not worried about the cost to move between rollups. And I just reject the idea that like moving between rollups can ever be completely costless in high volatility situations. Yeah, sure. Today, there's not a lot of things going on and everything is kind of quiet. You can move for a fraction of a penny. Sure. But what about when the shit hits the fan? Like what's going to happen? And you need to design around that. Otherwise, you can't build a strong financial system off of something that only works when times are quiet.
Yeah, and absolutely. And people are interested in double clicking into that capital efficiency issue with intents. They can go back to Bo's episode from Polymer, where he documents kind of like the lockup period for a lot of those different funds. So I'm quite curious because you guys have been so early to so many different trends, like the DePIN being one of them. And you guys have this thesis-driven approach. Talk to us a little bit about how, like, your guys' approach to investing and how you're identifying these trends and like what signals you're looking for.
I think we approach the market very differently than most investors, professionals and retail. A lot of people look at deals as they come across their desk, or they look at names off of, doing some sort of screener on CoinMarketCap or something, and going through a bunch of names saying, do I like this? Or do I not like this? And they're making the decision after looking at the asset. We flip that. And so our process is first we form the thesis. And that's first principles thinking, what is the right way to solve this problem? And then we try to find things that fit the theses that we have formed. And so it's just the exact opposite. Like we start with the thesis first, and then we find the project. A lot of people start with the project, and they're like, okay, what's the thesis for this project? If I were to invest in it, what would I be underwriting? And that can work. It totally can. Our process is just the exact inverse.
So let's take an example of something like DePIN. So you guys were very early to that. How did you guys maybe identify that, where you're just like, hey, centralized, providers are not going to be able to scale or not be able to do things at a cost effective manner, and then you search for companies that were kind of trying to fill that mold?
Yeah, I've written about this extensively on our blog, and posts such as like the Proof of Physical Work post, I think, is probably the best one to look at for a general overview of this. At its heart, I see blockchains as a coordination technology that allows distrusting humans to coordinate with each other and create something that they otherwise wouldn't have been able to create. And I think DePIN is an instantiation of that, because there have been a number of attempts at things like decentralized telecom networks and Wi-Fi sharing, but there's no incentives prior to blockchain to roll it out. And when you don't have incentives to roll it out, you can't expect people to be doing, huge economic investments out of the goodness of their heart. It just doesn't work. So you need that economic motivation, and you need that coordination tool that supports micropayments for things of value that a lot of people want to use, like network connectivity, and allows all of that coordination to happen without a centralized party in the middle that has to organize everything. You want these self-organizing systems. I think HiveMapper is another really good example of that. Of everyone did have dash cams driving around, right? Like all the Uber drivers and all the FedEx drivers, et cetera. Like they had dash cams, but there was no coordination mechanism for them to upload all that dash cam footage up to Google, who would then process it and put it into the map. Like that just didn't exist. And then HiveMapper comes along and says, like, hey, you were going to have a dash cam anyway. Buy our dash cam. It's a really good dash cam in and of itself, but also we will coordinate the submission of these images, which you as an individual who's driving around, like, you're not collecting enough valuable data that anyone wants to contract with you. You're just too small. But you and 100,000 other people all driving around, now that data is quite valuable and allows you to get to the scale that people want to go buy it and buy the data, and that makes the map better because it's made with fresher data. And I don't think that would be possible without blockchains, because you just can't coordinate all of the payments and all of the people.
Yeah, and to kind of double click into the DePIN example, like, of course, we love HiveMapper here on the podcast, but talk to us a little bit about, like, what other areas of DePIN do you feel like are good? Is it like latent GPUs that are lying around? What is it, Helium, and they're, trying to bring up, telecom networks? Like, what do you think is actually like ripe for using these like tokenomic incentives to actually bootstrap networks?
HiveMapper, we've discussed. Helium, I think, is really interesting. Just yesterday, they announced a free phone plan. So you can sign up for Helium Mobile for $0 a month. And this is not some like, first 6 months free type promotion. It's no, this costs nothing. You are limited to, I think, like 2 or 3 gigs of data on there. But they are able to leverage their orthogonal business model of, they want to get data on where subscribers are, so then they can properly incentivize deployment of Wi-Fi hotspots in those locations to serve offload traffic, not only for Helium Mobile, but also for other carriers and other MVNOs, other MNOs. And this is just a really orthogonal way to go about that. It's like, okay, well, what's my CAC of a mobile customer? It's like, well, if I give someone free service, the CAC is how much you're paying to make that happen, and is what you're getting out of it worthwhile in terms of the value of that data, the value of that customer relationship, the value to be able to upsell them on something. And that would not be possible without the DePIN business model. There's a reason that no other MVNO out there has done this before. So I think, to zoom out, like the things that I really like in DePIN are things where it's a passive setup. You set it up once and then you don't have to do anything else. Whether, plug in your GPU into whatever system, IONET, et cetera, render, or it's put the hotspot up or put the dash cam in your car. You set it up once, the thing automatically goes and creates value, real consumer value, not some like circular crypto thing, but something that real world people want to pay money for. People are happy to pay money for mobile connectivity, and it needs to be something that requires a lot of people to coordinate. If you and like a few friends or a small company can go and cover the whole country with whatever the product is, then that's not the best candidate for DePIN. I think DePIN works best when it's, I need 100,000 people or 1 million people or 10 million people to coordinate to create this product for it to be really valuable.
Yeah, it's a very interesting space, and I always love it because I came from the Google Maps background, so I was always passionate about mapping, and it's incredible to see these things getting built out. So we've talked a lot about DePIN, we've talked about Solana. Talk to us a little bit about some of the like other investment theses you guys currently have, and like where do you think things are moving in the next, let's call it 2 to 3 years? Like what kind of early stage ideas do you guys have?
I don't know if they're as early stage. In fact, I am much more excited about things in public markets that are going to compound and grow than I am about net new things. And here's the reason why. When blockchain technology became well understood by early adopters and technologists and builders in the 2016 to 2020 period, a lot of the best ideas of what blockchains will be useful for came out then. Things like DeFi and payments and DePIN. These ideas were easy to think of, but we were facing a hostile regulatory environment that entire time. And what that meant is like these things couldn't actually grow and scale in the same way that they can now. So they had this huge headwind blowing in their face that was just slowing down their growth. And now I think those projects are all out there, like the big DeFi projects, DePIN projects, et cetera. Like they're all out there. They're all battle tested. And now we have the regulatory tailwinds behind us. Things are going to open up. And that makes me bullish on the really obvious ideas. I'm not actually spending as much time trying to find like the super non-obvious edge case thing that like no one's ever thought of. I think there was a time for that, and the time for that was earlier in the development of this market. And I think for the next like 4 years or so, the market regime we're in is one where the biggest winners are the compounders, right? I'll give you an analogy, right? Like when the internet really became popular in the 90s, well, at that time, it was worth it to go and try and find the like weird new thing that was now uniquely enabled by the internet business model that wasn't previously possible. But then as the internet became more ubiquitous and broadband became available in the mid 2000s, actually the best thing to invest in were the things that were going to scale, the Googles and the Facebooks of the world, the Amazons, like those continued to scale. And those were the big winners because the idea was obvious. E-commerce was obvious. Search was obvious. Social networking was obvious, especially in hindsight. And it wasn't the nth, next social network that took off. It was the one that was at the right place with the right scale at the right time when it was time to start compounding.
Yeah, it's a very astute observation as well. Like if you look at the history of a lot of these tech companies, like a precursor to DoorDash has failed many times, like either via lack of bandwidth. There was, many different clouds before Amazon Web Services took off. And it's really that like, middle of the Venn diagram between like, hey, good regulatory environment plus like technical proficiency. So like you're saying a lot of the great ideas are already out there. What kind of great ideas do you feel like are currently out in the market? And you're like, you know what? I feel like that is something that in this new regulatory environment is going to really, blossom given the lack of headwind.
I think mostly DeFi, right? I think payments will do very well. It's very hard to invest in payments because I think there isn't going to be a lot of margin in that. You just can't extract value out of payments on a blockchain anymore. If I send you a payment on Solana and it costs a fraction of a fraction of a fraction of a penny to do that, like no one's really making money in that transaction. But a second order consequence of payments is now you have some stablecoin that I sent you. And you're like, okay, well, I could go and like offload this to my JP Morgan account or whatever, or I know that I might need to pay, my poker buddies for poker night tomorrow or whatever. So let me just put this in a yield bearing protocol for now and get some additional yield on it while I wait. And I think DeFi is a big beneficiary of things like stablecoin legislation that was just introduced yesterday. I think DeFi is a big beneficiary of all of the legitimization of wallets and blockchain technology. And I think actually the easiest place to underwrite in DeFi is borrow lend, because borrow lend is the one thing that I can say with absolute certainty is better on a blockchain than it is anywhere else. Every single centralized lender has basically failed and blown up, both in TradFi and in DeFi or in crypto land, right? Like we forget 2008, like all the banks were gone. There had to be some pretty massive bailouts. So borrow lend is just a market that leads to blowups when things are opaque, when you don't know who has what risk, and everyone is just kind of obfuscating like what the source of the yield is. But in DeFi, like you can see exactly what the yield is. You can see exactly what the collateral ratios are. You can underwrite all of that. You're not trusting anybody. It's all out there. So I think borrow lend is probably the most obvious, biggest idea out there for DeFi.
Do you feel like there may be an issue with the non-opportunity to do under collateralization on DeFi, given the lack of trust, and much of our financial system runs on under collateralized debt?
I think under collateralized debt will always have its place, but when you go deeper into how the financial system works, how the banking system works, like everything is collateralized. The banks have to settle up with each other at the end of the day, and their balances need to work at the Fed. Otherwise, you're going to have a really, really big problem, and you're going to have a lot of very serious people be very mad. So there is no concept of under collateralized at the very base layer of even the fiat system. And what there is there are these groups that transform risk, where they, like banks or other types of lenders, who extend to you as an end borrower an under collateralized loan, but they are basically posting risk capital against that loan as per their regulatory requirements on the other side. So they are collateralizing it on the other side, and then they have an equity buffer, and there's all these layers to it. So I think under collateralized lending will have its place, and the version of the world that I think will happen for DeFi is I think what's popularly called the DeFi mullet. It'll be centralized in the front and decentralized in the back. So you'll have centralized front ends that do the regulatory requirements. They do the reset your password. They'll do things like do under collateralized loans, because they have legal recourse and they're going to go after you if you don't pay them back. Whereas a protocol like, let's say, a Camino or an Aave, like they have no legal recourse. They can't sue you. There's no they have no standing. There's no entity. So I think that becomes the back end, which all of the front ends then settle back to.
And now with this new regulatory environment and renewed interest in DeFi from an institutional perspective, like we've heard like Larry Fink say like everything will be on chain in the future. Do you start to see more of these financial institutions, like the more legacy ones, start to come on chain and start to use DeFi? Like have you been seeing this from your own view?
I think we absolutely will see it. It hasn't happened yet. I think we need market structure regulation and legislation in order to make that happen. I'm optimistic that this is the administration and the Congress under which that will happen. But once it happens, I think this is one of those like happens slowly, and then all at once. And I have a theory on what the unlock will be. And I think the unlock will be some ability to incentivize long-term shareholders over short-term shareholders. Right now, if you and I buy a stock and your time frame is measured in seconds and my time frame is measured in decades, we still get the same treatment. We still, get to transact at the same price. We still get the same dividend yield. We still get the same voting while we hold it, right? Like we still get the same everything. And I think that's just a fundamentally under optimized version of capital markets. And the reason that it is because like it's an administrative overhead to track, like, okay, Jax is going to hold it for a minute, but like Tushar, he's going to lock up his shares for 5 years. So maybe when we're voting for the next like board of electors, like we shouldn't give the guy with the 1 second time frame the same vote as the guy with the 5-year lock on his shares. And I think tokenized securities that borrow concepts that have been tested in DeFi, like vote locking and other benefits for locking up, will be the most obvious thing in hindsight.
Yeah, it's quite interesting because I guess the government, in a sense, tries to do it with the tax incentives, but you can't really do it from a company perspective. I guess the one thing you could say, like, these ETFs have like huge proxy votes for better or for worse because they have so many holdings. But yeah, that's quite an interesting thought. So one thing is we have a lot of builders that listen to the podcast that are always looking for ideas to build on, and given that like you guys are very good at spotting early trends and good at spotting like where value will accrue in the ecosystem, what do you think is a good like startup idea or a good place if somebody's like new to being a founder that you would recommend they focus on, or you think they should take a second look at?
I would be looking at, there's 2 categories of things. I'm a big fan of DePINs. We wrote a post, I think like 2 years ago. It's on our blog discussing the design space of DePINs. So if you are interested in building a DePIN, I think that is the number one thing to go read. And if you have a unique DePIN that you want to build, please reach out to us. We would love to talk to you. And in that post, we lay out exactly the types of things that we'd be looking for out of a DePIN opportunity. And the second thing that I would focus on are things at the intersection of payments and DeFi. And like, we've had this idea for a little bit that I think is really fun. I call it buy now, pay never. Because there was this concept of buy now, pay later that got very popular in the last decade or so. And I think the next evolution of that is buy now, pay never, where instead of paying you for XYZ, subscription or purchase or whatever, instead of doing that, I lock up my balance of stablecoins on Camino or Aave or wherever, and redirect the next $10 of interest to go to your wallet. And so like this has a couple of advantages. The first being, I don't feel like I spent any money. If I had $100 and I just redirected the next $10 of interest to go to your wallet, I still have $100 at the end of it. And I like psychologically don't feel like I spent anything. And also it has the advantage of like, I didn't earn that interest, pay taxes on it, and then spend the money. I just redirected that interest to you. So I never received it. So I think there's an efficiency there as well. So that's a fun idea that we've been toying around with.
I want to say when I had interviewed EtherFi, they had this like some kind of credit product where it was essentially part of your balance would repay itself, but I don't think it was fully repay. I think the only problem with that I think I can see is like maybe the user behavior. It's like when people pay with cash, like they're way more prudent. When people pay with card, they're even less so. And then it's like, you probably just have to combat the user education problem there if they just spend way more than their balance. So finally, like where can listeners learn more about you personally? Like what's your Twitter account and where can they learn more about, Multicoin?
I think the best place to go is our blog, multicoin.capital. We write a lot on there. It's a variety of things, thesis posts, it's asset reports. There's a whole bunch of, we did like 2 year-end posts of predictions for the year and also what is not going to change, which I thought was a pretty interesting post. So I think that's the best place to go. Do follow me on Twitter if you're interested in hearing my random thoughts and ramblings on this stuff. My handle is Tushar Jain with an underscore at the end.
Awesome. Perfect. And we'll put that in the description so anyone can go there and follow Tushar. And thank you so much for coming on the podcast, and let's continue building the future of on-chain.